Good morning, this is Ron Brown. It's Sunday morning, the 5th of November 2017. I'm going to take a quick look at the markets and also explain about some files that I have decided to make available to everyone because we all need to be on the same page, those of us who use HGSI. Originally, these were going to just go to the Insider Club, but the Insider Club will have other benefits, or does have other benefits, like a weekly up-to-date collection of index groups, and also of I'm going to be posting an occasional stock based upon VPA characteristics and so on that I think has a chance of either going higher or lower. First of all, I want to point out that these new files, which I'm going to make available through George as an add-on, they're the same files that I've been using, except they're really they've been modified for end of day only. And the reason for that is Yahoo pulled the intraday. Yahoo was purchased by Verizon, and evidently they really don't care about all the people that are tied into these servers that use the data. So I'm going to concentrate on end of day, and also the end of day I'll be tying into Thinkorswim to show you a workaround for now until Matt and George really figure out what we're going to do on the delayed quotes. They're looking at some options. There just really isn't much out there. Yahoo was the ideal situation because Matt could go in and pull up all these stocks, every stock in the database, and get a delayed quote. But we just have to move on from that right now. First of all, I want to talk about the market, and I'll show you some things that I've been working on as I go through this. There's been a lot of discussion about the Hindenburg. Now, the Hindenburg, in my opinion, is a totally unreliable market indicator. I don't put a lot of faith in it anymore. Why? Because the markets have changed so much since this indicator was put together. I don't know if it works or not, but I'm going to look at the NYSE composite here. I'm looking under my major markets plus under the Woodward and Brown user groups. I have my screen split between the warehouse and a charting view, and I'm going to go into this will be the file that will be available for everyone, 2017-1104 end of day. I'm going to go in and use Ian's multiple indicator chart. It's a chart that Ian used. He liked it because it has a lot of signals that he relied upon, and the Hindenburg was one of those signals. But the Hindenburg, in my opinion, has pretty much lost its value. Let's just take a look at it over the recent year, the last year. Here's the Hindenburg signal. He had been selling right before the upturn. Here's the Hindenburg signal. It based sideways. The market continued higher. This is the NYSE, by the way. Here's another Hindenburg. Market continued higher. Here it looked like the Hindenburg might work. The NYSE dipped for a while. You can see the distribution in the Force Index 13. This is the red area here, which corresponds with this histogram. And now we have a couple more Hindenburgs. Some people evidently are not getting the Hindenburgs. I have no idea why, but I don't think it's that big a deal personally. I'm going to show you the indicator, Hindenburg Omen. These are the settings that I'm using. These are all the default settings, and nothing has been changed as far as I know. But what I do not like about this indicator is that it really is curve fitted based upon these indicators. I'm using the HGSI all NYSE index, and this is what I'm coming up with. Now, am I going to sell the market here? I don't think it's time. I think it's really a waste of time to put so much faith in one indicator. What do we have here? Let's just look down here. The Bongo Weekly is still green. The Bongo Daily is red. The accumulation distribution is on A accumulation. The Force Index 13 is positive. The Force 2 is positive. Bollinger Ribbon, the relationship to the ribbon here is neutral. Percent B in bandwidth, I'm not so sure I ever understood that indicator, but I don't use it. But it's green also. This is a oversold, overbought indicator, and here it was clearly oversold. Good signals going forward. Right now it looks like it's neutral, and this is a VFB of the percent B times the bandwidth. Once again, one of Ian's indicators that I really don't use, and I'll say that I really don't use it because I really don't understand it. But you know, Ian had his indicators, and I personally, you can really overdo it with indicators. Now let's take a look at this market here. I'm going to go to a different chart. I'll just start with the Nasdaq internals and use it with the Nasdaq. Go on to the composite here, and I'll bring up. Let's just make this full screen. I'll do an alternate I to bring this information up, and let's take a look at this market objectively. Go over here to this. You can see that the percent of the daily range on the Nasdaq, it closed near its high, an all-time high at 98.66%. The accumulation is B. Bongo Weekly and Bongo Daily are both yes. Both force indexes are positive. This is the days since the force indexes and so on. White body, yes. VPA trends are up, up, and up. That's the long, medium, and short. The percent volume compared to the 20, 50, and 90 day, they're all above normal. It's at a 52-week high. You can see that right here. It's up 34.4% from the 52-week low. The percent price change from the beginning of the year is 25.7%. And it looks extremely strong. Are you going to short this market? Based upon the Hindenburg, I don't see it, but you know, whatever. You have a 50-50 chance, I guess. Here's the volume. Let's look down here. Now, this is where you get some insight into what's really going on. I'm going to click on my alternate 1 key just to zoom in here so we can see this better. You can see the volume is running above normal, which is also over here. And advancing versus declining stocks, the decliners actually led the advancers on the Nasdaq, and you can look over here and see that. Let me make sure I'm on the last day. Barely. The decliners led barely. Now the advancing volume compared to the declining volume, here's a graphic of it over here. You can see this is the advancing volume divided by the declining volume. The advancing volume is clearly ahead of the declining volume, so there's a lot of money flowing into a few stocks. New highs versus new lows. Now, you know, this is somewhat of a danger signal here, because this market is not a broad market. It's a very selective market. But until these leaders really start breaking down, I don't see how you can really go against this market, especially if you're trading the leaders. Now down here, the ARM index, it's below zero. This is a zero line. On Friday, there was some strong buying based upon this. Even though decliners led advancers, the volume tells us that there was money flowing into some of those strong stocks. So I just do not see a market breakdown yet. Let's go ahead, and I'm going to go into the NYSE, and I'm going to change charts. I'm going to go from my 1 chart down to my number 4 chart. These charts will all be available to you. And notice that I put the the VPA flags in here. You do not have to use them. You can turn them off. Right mouse click, edit the indicator, go to volume price analysis. You can draw the VPA flags in the chart, or you can deselect them, and you can also put the analysis in the upper corner of the chart window, or you can include the analysis in this window here. So let's just do this. So I'll turn this on for now, and this gives you the VPA analysis. The last VPA analysis on here was back on 10/31, and it was strength seen returning after a short downtrend. It's just holding in here. Now I'm going to go back to the Nasdaq, and this one is signaling that they're, well, I need to turn this on. Edit indicator, volume price analysis, display VPA in the upper, here it is right here. So when I click on this one, high volume down bar and after an up move on high volume indicates weakness. It's a one-day signal. It didn't last long, did it? Now here's another one, same signal. High volume, alternate C is the crosshair. High volume because it's above the average, and it opened strong, gap open, it closed near, well, it closed near its midpoint. Here was the low down here, but it is holding up. Here's support, and then we had the big up move on Friday. Yes, it is a narrow market. I'm the first one to admit this, but I just do not see it breaking down yet. Now let me go back to the NYSE and go back here to the NYSE, and let's look at these internals for Friday. You can see that the advancing issues versus declining issues were essentially flat in the visual, but if you look over here, you can see there's a difference of 100. The advancing volume compared to the declining volume on the NYSE, the volume was actually negative. And then down here on the new highs versus new lows, I'll move this out of the way. You can see that the new highs peak clear back here, and it's been drifting, or this number has been going down for the most part over quite some time. So once again, a narrowing of the market. This is probably why these Hindenburg signals are showing up, but is it worth betting against this market? Well, it depends on what groups you're in. Yeah, some of them are weak, some of them are not doing well. That's where you should look for the weakness. But to say you're going to short the overall market based upon the Hindenburg, I think it's personally folly. Now, this down here, the ARMS index 0.9476, slightly below 1. So there was some buying pressure here based upon the ARMS index. I'm going to resize this chart. I'm actually using a program called Max2, so it keeps my screen organized. It's $19 if you want to buy it. But you can see the percentage of the daily range on these indexes. Most of them were green on Friday, so that indicates that there was strength. This is the percent off the 52-week low. Look at these numbers. Look how close most of these are to the 52-week high. Of course, the VIX is down 60.3%, but you know, a lot of these are doing very well, or are close to the 52-week high. I'm going to click through to the ranking module. You can see using Ian Slow, which is based upon 6 months with 70% of the emphasis on the last 3 months. That gasoline has been very strong, as has the SOX and oil fund, Dow Jones Industrial Average, and so on. Now, I'm just using Ian Slow, but if you prefer, you can change these settings. Let's go in here and do a percent change. Let's do 26 weeks, which would be 1/2 year. And I'm going to change this from relative strength to raw relative strength. This shows you the gains in these indexes over the past 26 weeks. Gains or losses, I should say. So look at the gasoline. It's up 33.83%. SOX is up almost 29%. Oil is up 15, almost 16%, and down the list. All of these indexes are up with the exception of the UUP, the ETF for the dollar, and the VIX, which continues to fall to new low levels. I can see that the small caps have been lagging. Russell 2000 is up 7% over that time period. The S&P 600 is up 6%, and the S&P 400 is up 5.6% over the past 26 weeks. And that information is up here at the top. You can always look at the top to see your time period, or the time period you're using. Now I'm going to take a different approach to this. First of all, I'm going to change charts and everything, and I'm going to go down. I'm going to go up to all securities, and I'm going to, well, just use the quick pick view. I'm going to go to rocket stocks. I'm going to click on stocks hitting 52-week highs, and look at this. On Friday, 200 stocks hit a 52-week high. Now let's get a different chart going over here. Just to go into my impulse reaction charts. This one right here. I click on this one. I'll go to chart number 2. Now this stock, care.com, hit a 52-week high on Friday. Why is it at the top of the list? Because it has a it's attached to, or it's sorted by a combo which I call strong momentum. But all these stocks hit 52-week highs. I'm going to go in here to my spectrum analyzer. I'm going to go up to industry, and I can see what groups of stocks are hitting 52-week highs, or which ones are the most heavily populated. Application software, look at this, integrated utilities, biotech, semiconductor devices, REITs. These are the dominant groups. We all know that semiconductors have been strong for a long time, and application software is doing very well also. I'm just going to minimize this. Let's go to application software. I'm going to change to the industry group to isolate these. These are the application software stocks that are hitting 52-week highs. There are some familiar names in here like Adobe, Cadence, Carbonite, RealPage, so on. Activision. Let's just take a look at some of these charts. Now this is a very loose chart, type of stock that'll drive you crazy. Just make this a little bit larger, but you can see that there was an effort to rise, more than likely. Earnings came out on Friday. Look at these VPA flags. Look at this as a trending stock. According to my definition of trending, with all of the stock, or the stock in a fan formation, yes, it's loosey-goosey, but there were some excellent VPA flags here. Notice that it came down to the 50, held at the 50, and then it was holding at the 18 when earnings came out. Now we have an effort to rise, also with a warning though of an upthrust, which means that on this very heavy volume, more than likely there's going to be some short-term profit taking. Don't know that for sure. This stock only trades 296,000 shares, and the PE is non-existent if you pay attention to PEs. Is this a frothy market? Absolutely. Okay, here's another one. Trades 297,000 shares. Look how this gapped up. Look at the profit taking. It's always risky to chase these on the day of earnings, and I assume earnings came out once again. No PE, more froth. Hortonworks, no PE. Look at these negative earnings, but improving. Once again, some very good VPA signals here. These are not the type of stocks that I really like to look at. Now, Adobe is a different story. Look how this stock has continued to move higher. Here's an effort to rise. Here's an effort to rise here. Several positive VPA flags after this negative one, a gap up. This was the beginning of another move. Viable gap up. Notice the group is moving up. Notice the fan is intact. Now, one thing I want to point out is this new version of HGSI. Some of you are having trouble flipping charts on less powerful computers. Now, this is visual. This is a visual filter back test. I'm going to go down here and edit the view. It'll say visual filter back test. Now, in the new version, the minimum used to be 1 year. You can go all the way down to 1 month. Now, I've gone in on many of these charts and changed to 3 months. That's plenty of visual filter back tests here. Because when you use longer periods, it takes longer to calculate these visual filter back tests. So I have pretty much standardized on 3 months. If you want to go longer, you can. If you have a fast computer, edit the indicator and go in here and change it. Now, I'm only going to change one of these, and I'll just do a year. Even though I just changed one of these visual filter back tests, it is going to apply to all of them. So you can see how this filled in, even though I just changed the one number. If I go back in here, this is 1 year. This one's still set on 3 months, but it will take the longest period and calculate off of that. So I'm going to go back in, change this to 3 months. I've got a very fast computer here, as you can see. And getting back to this, obviously, Adobe is hitting a 52-week high. Let's look at some more of these stocks. Cadence Design. Earnings are out, and we have some decent earnings on this. Look at this beautiful long-term chart. Does this look like these leaders are breaking down? Now, Carbonite, I hate this stock because it's all over the place. It's the personality of this stock is what should I say, frenetic. And this is an example of more froth. Those who bought the news chased it up to $27, and those that chased to the top or got squeezed out, or let me say chased to the top, they're in a losing position if they're still holding. You should really only look for neutral to positive charts. I'm just going to flip through these. I'm just pointing out that all of these stocks are hitting 52-week highs. Many of them are neutral. This hit a 52-week high, Activision, but it didn't close at a 52-week high. This filter will pick up stocks that hit a 52-week high. You have to see where they closed, though. So initially, the reaction was good, and then the sell-off occurred. Another one, Open Text. 52-week high took it up to here, but it closed down here. Right here in this column, it'll tell you how far off the 52-week high it closed or how close it closed. Now, Cadence Design closed at its 52-week high, followed by NICE, Ebix, Adobe, and so on. These are the ones that closed nicely. Now look at this one, Carbonite. Closed 11.1% off its 52-week high, even though it hit the 52-week high on Friday. So just because the stock hit a 52-week high doesn't mean that it closed at it, so you have to be very careful. Once again, this is a low volume stock, only trading 305,000 shares on average. I don't want this video to get any longer. It's already up to 25 minutes. I'll come back and do a different video explaining my end of day views, and show you how I'm going to work with them with Thinkorswim to get real-time quotes after prospecting with HGSI using the real-time views. So I'm going to cut this one off right now. I hope I gave you the impression that just because that Hindenburg is out there signaling the market, yes, it's a narrow market, no question about it, but I just don't see this market breaking down yet. The Hindenburgs in the past, over the last year, those signals have been essentially worthless. So anyway,